Welcome to Pro Webcast News, where we bring you daily industry updates. Today is Thursday, April 29th, and you're watching the Afternoon Update with Paul Wilson. Today's news is sponsored by Covenant Reliance Producers. We build success stories. For more information, please visit crproducers.com. Now for today's headlines. Fund managers in the U.S. increased their exposures to equities during April, while decreasing bond allocations due to signs that economic recovery is sustainable, according to a Reuters poll released today. The poll, which surveyed 12 U.S. management firms, found that the companies held an average of 65.2% of assets in equities, up from 64.6% 1 month earlier. Meanwhile, the equities allocation had been 66.2% in February, the highest figure since the financial crisis. Other Reuters U.S. polls this year show participants have maintained a high exposure in U.S. stocks. In addition, with approximately half of S&P 500 companies having reported quarterly results, 82% have beaten analyst expectations, providing further hopes of sustainable recovery. In regulatory news, Goldman Sachs may soon settle its fraud case with the Securities and Exchange Commission, according to a report today by the New York Post. Goldman Sachs will choose to cease its legal battle rather than prolonging the issue and further damaging its reputation. Goldman chief executive Lloyd Blankfein and other executives endured a tough cross-examination by U.S. lawmakers regarding the company's ethics and treatment of clients earlier this week. The SEC filed a civil fraud suit against the company, saying it hid important information about a mortgage-related security from its investors, charges that Goldman has denied. In housing news, foreclosure activity fell in 14 of the top 20 U.S. metro areas during the first quarter compared with last year, despite an overall rise in foreclosures, according to RealtyTrack. The declines in large metro areas come as a result of government efforts to diminish foreclosure activity and don't necessarily mean an overall change in foreclosure trends, RealtyTrack said. 4 Sunbelt states accounted for all 20 metro areas with the highest rates during the quarter, with California accounting for 10 of the top 20 foreclosure rates, Florida for 7, Nevada for 2, and Arizona for 1. Meanwhile, activity decreased on a year-over-year basis in 8 of the 10 largest metro areas, although 77% of large U.S. metro areas posted year-over-year increases in foreclosure activity. Meanwhile, overall U.S. foreclosure activity increased 16% compared with the first quarter of 2009. I'm Paul Wilson, and thanks for watching Pro Webcast News. For more in-depth news and features, visit producersweb.com.